that we are able today to launch our OECD report on building financial resilience to climate impacts. We have a distinguished set of experts with us and senior representatives. And I would like to give the floor to Jo Tyndall, the Director of the Environment Directorate at the OECD, to give us a few perspectives, including also from the COP27 perspective, as she was just in Sharm el-Sheikh a few weeks ago. Jo, the floor is yours.
Well, thank you very much, Stefan. Already it seems like a lifetime ago since I was at COP27 in Sharm el-Sheikh, but I realize it's only a few weeks. Well, good afternoon, and indeed for people joining online, good morning or good evening, and thank you for joining us for the launch of this report, Building Financial Resilience to Climate Impacts, a framework for government action to manage the risks of losses and damages. So here is the full report, but we've also got the summary version of key recommendations available for people in the room too. Now, the report is the result of close cooperation across 3 OECD directorates, the Environment Directorate, the one I'm from, Directorate for Financial and Enterprise Affairs, and the Public Governance Directorate. It follows up on and extends some of the analyses included in the OECD's flagship report on losses and damages that was launched at COP26 in Glasgow a year ago. As the impacts of climate change continue to worsen, loss and damage is high and getting higher on the climate agenda. Most of you may well be aware that at last month's COP27 in Sharm el-Sheikh, the key outcome was a decision to agree on a funding arrangement for loss and damage to climate, responding to some very strong and sustained demands from developing countries in the process. Now, that makes this a particularly timely report, which has the potential to feed into the plans to operationalize this funding arrangement over the next 12 months. According to the IPCC, again, as many of you will be aware, the world has already warmed by almost 1.1 degrees on average. And even at this level of warming, the frequency and severity of extreme events like heat waves and tropical cyclones have clearly increased. This is already causing significant losses and damages around the world. And just to give some examples, the economic impacts of Hurricane Dorian in the Caribbean in 2019 were estimated at a quarter of the Bahamas GDP. This past September, Hurricane Ian resulted in billions of US dollars in estimated damages in Cuba and Florida. In Pakistan, and I think it's pretty hard to comprehend the implications of a third of the country being underwater. There were deadly floods caused by heavy monsoon rains and really alarmingly melting glaciers. The World Bank estimated the resulting damages at some 15 billion US dollars. The damages caused by extreme events in 2021 and 2022 didn't stop there, of course. There are plenty of other examples, like the heat waves in North America, in India, and one that even occurred during the European winter. All of these demonstrate how the extremes are growing in intensity, even before we've either reached or breached the 1.5 degree guardrail. The increasing frequency and severity of extreme events is resulting in worsening damage to the infrastructure, to homes, schools, and hospitals on which societies depend. And they're having much more significant impacts on lives, livelihoods, and the broader economy. Scientists are already warning the world could easily reach 1.5 degrees Celsius warming during this coming decade. It's abundantly clear from what we're seeing today that with this seemingly small temperature increase, the frequency and intensity of heat waves and droughts is going to increase dramatically, causing huge damage to agriculture, for example, at the very time we're aiming at food security for a fast-growing global population. I think it surpassed 8 billion people just a matter of a few days ago. While parts of the world are frying, the floods we'll see at the same time are going to lead to the quicker spread of diseases. So recovering and rebuilding in the aftermath of an extreme event takes much longer than the media interest in the event. Can often take multiple years. And my hometown as a person growing up was Christchurch in New Zealand. Now this was earthquakes, but I have to tell you that more than a decade after those earthquakes occurred, the city is still in the process of being rebuilt and recovering. That's long disappeared from the radar of international media. And as extreme events become more frequent, it leaves a shrinking window for recovery and rebuilding before the next disaster unfolds. Relief, recovery, and reconstruction are also expensive, with governments shouldering the lion's share of the cost. This in turn puts pressure on public finances and can result in significant fiscal risks, especially when countries are struck repeatedly by extreme events. And I think we've seen that in the Caribbean, for example, with typhoons going through. Fiscal risks limit governments' possibilities to recover and rebuild after the disaster, let alone to pursue the development goals that are often urgently needed. Money that should have gone to education, healthcare, or infrastructure may have to get diverted to emergency response, to rehabilitation and reconstruction, while access to new finance is limited, very often quite limited. In a vicious cycle, inadequate access to funding in the aftermath of an extreme event actually slows recovery and reconstruction, leading to longer disruptions and greater social and economic impacts. Of course, the first priority is therefore to limit global temperature rise by hastening the transition to net zero that's set for mid-century. But at the same time, this more than gloomy picture unfortunately makes it crucial for governments to prepare for and to manage the financial impacts of these types of events already, and create an enabling environment that supports adaptation, risk reduction, and fiscal resilience. That's because these things are already happening, so it's a problem that simply can't be ignored. So we want to help find workable answers rather than just admitting defeat and, in some cases, literally mopping up the mess. The report therefore addresses the challenges these climate-related risks present to governments. It provides a strategic framework for governments to support the fiscal. Every time I want to say fiscal, I say financial, and financial, I say fiscal. So the financial management of climate-related risks, in particular, their exposure to economy-wide losses and damages from climate change. The report also contributes to the debate on the respective roles of ex post versus ex ante financing and arrangements. This is increasingly relevant in managing the ever-growing risks of climate hazards, which we hope to explore during the panel discussion. I do want to thank the government of the Philippines for agreeing to be a first case study for the framework, highly relevant given their extreme vulnerability to climate hazards and risks, and for the government's timely support, which made it possible for the case study to be launched with the report. We are joined by a distinguished set of speakers today that have agreed to share with us their insights. But before we get started, I want to turn to my colleague, Carmine de Noia, the Director of the Directorate for Financial Affairs, who will provide a brief overview of the proposed framework.
Thank you. Thank you, Joe. So Director of Financial Affairs, not Fiscal. And but obviously you know, we need both sides. So thanks a lot. I mean, and so good afternoon here, but also for those who are from remote. So good morning, I don't know, good evening. And for some of you, it may be boring. You have seen me already this morning, but actually, I think and the topics are strictly interconnected. But first, so let me thank Joe, and also maybe building on some of the word that you have said, Joe, to providing a brief, you know, overview on, I would say, on also where we have a bit contributed on our side of more the analytical framework to for managing climate risks for to public finances, but then also the interaction, I think, which has been also the object this morning of public and private and the market is essential. But these can be also offer a useful benchmark for countries. Now, as Joe laid out, so climate change and the increasing frequency and intensity of all what we're seeing, so floods, droughts, wildfire storms, and heat waves, will have significant economic and is having and will have economic and financial consequences and fiscal consequences. And as we also mentioned this morning, what is really also striking is that this is I mean, we're all on the same, you know, flight. This is leveling, unfortunately, the field. So all countries, rich, poor, and also the extremes of what we're seeing on climate, which typically were in different areas. Now we may have even extremes, you know, if in the same part. So this is, and so then governments and as the de facto insurer of last resort have already and will be faced with increasing costs and to respond to the resulting losses and damages. The report we are launching today provides an analytical framework to support government efforts to prepare for and make decisions related to these risks. And in its simplest form, I think it has three components. So assess, mitigate, and fund. Now, assess refers to the need to understand and quantify the potential spending demands the governments are facing actually and will face in the aftermath of climate disasters. And this includes not only the obvious and explicit costs of emergency response, recovery, and rebuilding public buildings and infrastructures, but also the implicit costs of supporting vulnerable households, businesses, and even subnational governments that do not have access to the resources they need to recover and rebuild. The second point is mitigate. So mitigate encompasses the things that governments can do to reduce or limit the spending demands they will face in the aftermath of a climate disaster. Now, we have discussed again this morning a lot about prevention, and so this includes actually investing in adaptation to avoid loss and damage. Okay. And it also involves providing clarity on cost-sharing arrangements between levels of government and financial support that will be made available to affected households and businesses. So with limits actually in order to incentivize proper risk management. And including, and again, we mentioned this morning an important thing, which is also the liquidity support actually in the immediate aftermath of what can we have. But also it involves supporting the development of an insurance market that makes affordable coverage available for climate risk. Again, an important point we discussed this morning. And without that, we cannot have the first. And also we have listened for those who are there, also all the points made by all the colleagues in at least in the first round table, the World Bank, the indication they are giving. And actually, okay, the simplest, I would say, an important thing is the higher level of ex-ante insurance coverage of private assets usually lead to a lower need than for an exposed government financial support. And again, we have discussed and we know that there is a lot of, we have to tackle and possibly solve the great level of underinsurance, this insurance gap. We have heard that 2/3 of the population, world population, are in a sense underinsured. And finally, the fund. Now, fund means ensuring that plans are in place to access the funding needed to meet government spending requirements. And the approach will differ between countries depending on their access to capital markets or other borrowing arrangements, and the amount of fiscal space they have for reallocating spending or establishing contingency reserves. Some countries could benefit from transferring some of the risks to insurance or capital markets. And what is critical is that governments have the funds they need to respond quickly, as actually delays, maybe they have the fund, but even delays in delivering and immediately providing the liquidity support leads actually to longer disruptions and larger economic and social impacts. And we have mentioned this morning important examples of recent disasters. So maybe even the funding was there, but then was not immediately then available. And so in the report, as also Joe mentioned, we had the opportunity to test run this framework thanks to the excellent collaboration with the Philippines, which faces significant exposure to climate risks, but also has plenty of experience to share in working to assess, mitigate, and fund fiscal needs. So we stop here and allow you to explore the rest of the analytical framework yourself. We hope you find it useful. As Joe mentioned, this work is the result of a collaboration across 3 parts of the OECD. And we would welcome opportunities also to build on this work going forward. I turn to Stefan now.
Yes. Thank you very much. Thank you very much, Carmine, for briefly introducing the gist of the report, and thank you to Joe for her introduction. I'm very honored to moderate the roundtable today. Let me briefly introduce the 3 speakers. Dr. Heike N. is the Director for Climate, Energy and Environment at the German Federal Ministry for Economic Cooperation and Development, the BMZ, who also provided the support for this report. Daniel Clark from the Center for Disaster Protection in London, and Andy King, a member of the Committee of the Office of Budget Responsibility in the United Kingdom. So I guess many of you have seen the piece of the report. I think that the international context in which we are now able to launch this report today is a little bit different, because we have seen the discussions on losses and damages at the COP. But still, it's a very complex and multifaceted challenge. It's not just about compensating losses, and those who will go through the report will get a notion of the complexity of the policy agenda at hand. But at the moment, we would like to hear first from Heike on this issue, and how can governments improve the way that they finance the fiscal costs of losses and damages, and also what sort of financial architecture do we need, what can be the role of official development assistance, and yes, Heike, the floor is yours.
Okay, thank you so much, colleagues, for having me and providing lunch. Excellent. Okay, but there's lunch for everybody, so I don't get that. No, but really thank you also for the report and the engagement of OECD on this matter. We have been collaborating also last year, was it on managing risk, and on different levels. Really, the OECD is putting also this topic high on the agenda, and I think that is what we needed, what we need all. I mean, not only from the OECD, I think from all institutions around this table and virtually. Just to highlight why BMZ is dealing with this, we are the Ministry for Economic Cooperation and Development, and providing most of the ODA and the international climate finance for the German government. So from different levels, this is of high importance for us. And basically, I mean, I look at the first part of your question regarding what can governments do. There are like 2 perspectives. One is a bit more concrete, narrow technical, and there's a lot of rich information and technical details in the report and in the framework. And also there is, from my perspective, a broader political perspective to what governments need to do to increase their financial resilience, in the sense that they have to build up political will to prioritize ex ante discussions and measures and precautions that are not normally high on the political list when every 4 years are elections coming. They have to work on the policies respectively, the regulatory framework, but also, and this is linked to the political process, I think, create a discussion in society, awareness in society, include all stakeholders, because only then can the necessary measures, the necessary finance also be mobilized. And also maybe be channeled to the right places, but I come to that later. On the concrete perspective, I think also within the report and the framework, I mean, there are a couple of tools available in a set of really a comprehensive disaster risk management approach that are specifically important in the area of pre-arranged financing. So, for example, building reserves and contingency funds in the budget, having a credit-based pre-arranged finance, for example, with contingent credit pause clauses, or also shock responsive loans, some of the things we are also trying to support within our system. Sovereign and sub-sovereign risk transfer, like regional risk pools, are also ways for government to deal with this. Insurance coverage, of course, but also adaptive and shock responsive social safety nets. Also talking about the delivery and fast delivery. And ideally, sometimes these instruments can be combined in the best way possible. And so I think these are a couple of concrete, and there's much more in the report. But why I linked it to the broader perspective was, I think, we need the political support, yes, but also it's not so easy for each government, the German included, to really focus on the priority issues with the most effective and efficient measures, and get for those also the acceptance of everybody, taxpayers, people that are affected by the measures. So to target the approach of governments on how to build their financial, not fiscal, financial, I'm falling into the trap, financial resilience, really target the vulnerable groups of society or the key areas of government resources that are needed and actors and stakeholders. So it's really on the process side, on the stakeholder side, and also on the targeted group side. And really, it's also, I think, important for the sustainability of the approach of governments that we really take this broader, also policy-based perspective, and not only think narrowly on concrete instruments. And I think one last aspect, it was raised this morning, but also now, regarding prevention and what we need to do on adaptation and resilience. And I think in all instruments, what government itself is doing, but also what we are doing, and I didn't have the opportunity to raise it this morning, with insurance companies within the social safety nets, we have to do a better work in incorporating thoroughly incentives in the system. Talking about insurance, that would also help the affordability, the sustainability of the business case of the insurance sector. And if we build in adaptation, resilience measure, and have a decrease of the premium, for example, I mean, we have some showcases where this works, and that would help on every level. So we really need to have this broader perspective. I'm coming to an end soon. The international perspective you were asking as well. So Germany is very active in the field. We try to be also very constructive at COP27. I also feel a lot of gray hair coming out of Sharm el-Sheikh, not only on my head. It was really intense. I think what is positive, not talking about the mitigation and the strong fossil pushback in Sharm el-Sheikh, but talking on the positive side of things, losses and damages or loss and damage was at the heart of the debate. It was taken seriously. We could have an open discussion. Getting the agenda item out of the way immediately helped a lot to really talk substance, although it still will be a struggle to come really out of the transitional committee out with something sensible that is really addressing the needs, focusing on added value, and not creating something that we don't know who will finance it for what and how it fits into the landscapes. So there is really a positive decision. We try to contribute to this discussion with the Global Shield in the sense of getting it going soon. And we already not only committed 170 million euros, but also started in Sharm el-Sheikh first collaborations with Pakistan, with UNICEF that are delivering. But we are also really open to have intense debate on the whole landscape, but based on analysis and focus on vulnerability. Yes, also broadening the donor base, bringing private sector in, but really working on the most efficient and effective, because no public funds, no private funds will be enough if we do the wrong things. And therefore we need to be more comprehensive. And one last remark, I would like to say also that we very much appreciated the Bridgetown agenda. And this is, I think, a necessary discussion to have, talking about financial stability. And there we need to engage the OECD, the MDBs, governments to really increase the fiscal space to really deal with risk in a sustainable way. Thank you, and over.
Thank you very much, Heike. Suggest we'll also get back to some of these global issues a bit later in the roundtable. But first, I'd like to give the floor to Daniel, because he comes from the Center for Disaster Protection, which is also somehow linked with the UK FCO and the FID, now called FCDO, and has also some form of an ODA perspective on some of these issues. Daniel, so how would you take it from your end?
Thank you so much. And yes, so we're funded by DFID. So if I can also address the question around national and then international as well. And you mentioned you mentioned you hope that we find it useful. I think the recommendations in the report are incredibly useful. I think they provide a list of ingredients that countries can consider when thinking about better management of loss and damages. And I think they reflect the shift over the last decade, the increased recognition of the role of finance ministries in managing disaster risks well, and the silent revolution in organizations like the World Bank and regional development banks, where finance ministries have a much bigger role and a much stronger counterparts when it comes to the disaster risk management agenda. So thank you for that. My comments at national level, I think the question of which ingredients you use depend very much on country basis. So a lot of the examples may be appropriate in some countries and other countries. So I wanted to take the upper middle income countries or countries with a very strong public financial management, comments on there a little bit differently to maybe low income countries or fragile or conflict affected countries. So for upper middle income countries, the report mentions the importance of being clear about what risks the government is taking on that are explicit contingent liabilities and are implicit. I think for climate risks, climate risk management works. It can do a really good job at reducing the cost. So I think in the body of the report, it sort of articulates this clearly. I think it is this idea that really risks, climate risks should be explicit, really wherever possible. There are very few good reasons why climate risk should be left as being implicit. And there's also, in terms of communicating this and getting broader agreement, because as soon as you start talking about explicit contingent liabilities, people's eyes glaze over. So last year at the international level, we were joining with a number of other organizations, essentially calling for a shift towards more explicit contingent liabilities. And the language we used there was, if it can be prearranged, it should be. So, you know, if a climate event occurs and most of the funding hasn't been arranged in advance, you've been doing something wrong. And I think that's a really clear way to hold governments and international organizations to account in quite a sort of concrete way. On the problem statement at the report, obviously there are elements of financing losses and damage which relates to sort of macro fiscal perspective. Does a country have enough money in the aftermath of a disaster? I think there's also a really important point around, and this links to the point around, is government clear in advance what it would do if a disaster was to strike? And in economic terms, this is essentially a timing consistency problem. You know, if a disaster strikes, government will do something, but it won't admit beforehand what it will do. And this leads to poor risk management because nobody knows who is doing what risk management. And I think even for upper middle income countries, there was an evaluation of Mexico's scheme Fonden by some academics at Berkeley, which found that this scheme, which was essentially about providing a commitment device backed by insurance, increased post-disaster GDP by 2 percentage points for the 2 years after a disaster. There's huge benefits. There's a subsequent study by one of the authors finding that the health benefits alone were enough to pay for the whole scheme, this whole scheme, which was ensuring public infrastructure and low-income housing. So the benefits of these commitment devices where government is clear about what it will do and provides some automaticity in public policy can be really big, even for upper middle income countries. And then finally, the report is very helpful in talking about disclosure of protection gaps. And I'm sure Andy will have something to say about there, but I think it's important to disclose climate risks, but it's also important to communicate them well, because climate risk management is something that does require a whole of society approach. It's not the case that a small part of the finance ministry is able to manage most of the risk in the same way as balance and payment crises. This is something where it's really important that there's a discussion across society about the role of individuals in the private sector as well as government. So that disclosure is really important. Now, when you move to low-income countries or fragile and conflict-affected countries with, tend to be countries with much weaker public financial management, I think it does look quite different. So the costs and benefits of different potential options look quite different. Budget reallocations can be very costly. So low-income countries will often have to cut their capital expenditures, which can have very high opportunity costs, like Ethiopia in the drought of 2015-16. Many countries during COVID, low-income countries had to cut their capital expenditure, so the cost of that budget reallocation was very expensive. Also, contingency funds, some of these instruments, they can be it very much depends as to whether they're going to provide good value for money. I remember a conversation at a subnational level with finance ministry in a Southeast Asian country where they had set up this contingency fund, put some money into it. They have no idea where it had gone, and they'd stopped putting money into it just in terms of fiscal discipline. But this is a fairly common, managing, and also the politics around these sort of contingency funds can be quite challenging. Secondly, the report recommends fiscal risk analysis, and I think there's discussion there about disaster risk financing strategies. I think when you move into low-income countries and fragile countries, sometimes a national all risks, all sectors risk financing strategy may not be the right mechanism. Firstly, as it stands at the moment, many of these aren't actually made public. So most of the disaster risk financing strategies that have been developed around the world are not made public to the populations in those countries. But also in those countries where aid and ODA is often a higher percentage of government expenditure, it may be important to have discussions with development partners around shared objectives. And this often happens on a sector by sector basis as opposed to whole of government. So it can be easier to have better international collaboration if those discussions don't happen at the whole of all sectors at once. And I know that the World Bank, for example, is experimenting with these sectoral strategies. And then for in between, I think for lower middle income countries, I think the one thing I'd say is on public-private partnerships, which are mentioned in the report, but particularly subsidized public-private partnerships, which aren't sort of encouraged in the report, but many countries at the lower middle income country status have a decision to make. Are they going to build institutions that provide disaster relief or build institutions that deliver disaster protection? And often subsidized insurance schemes can help to bridge that gap. At the international system, I just wanted to frame my comments in two stylized facts. Sure. Yeah, exactly. Yeah. So at the international system, so the first stylized fact is, so we tracked funding for COVID. This is $125 billion of funding through the World Bank, IMF, regional development banks, and UN for COVID, and 98% of it was arranged after COVID hit. We did a similar analysis for climate shocks, and again the number was 97.7%. So that I think the sort of scale in the international system, really most of the funding is coming in afterwards, and it's arranged afterwards as opposed to being pre-arranged. And I think this is largely because the international system has been built at its heart with banks, development banks, and bank accounts. And I think there's a real, the IMF is obviously exception, has been built for crises. But I think this waiting until after a crisis and then mobilizing funding can lead to slow response, unpredictable response, undignified response. It can lead to gaps. It can be more expensive. So we talked earlier about the Global Shield Initiative and also the Bridgetown Agenda. These are both quite high ambition agendas, particularly over the next year, around increasing that share of pre-arranged finance in the international system. So it's no longer 2%, it's much more than that. So I think it's really, I just wanted to be clear that the scale of the challenge, the international system is 98% is arranged after disaster, and I think that really does need to shift. And so it's great to see these initiatives trying to increase. Secondly, there are real challenges with the quality for that 2% that is pre-arranged. There are ongoing challenges with the quality. So the World Bank, IDA, has a mechanism called the crisis response window, which was at the time we did this research, was a $3 billion fund to support countries to respond to crises. And this was a great innovation by IDA to try to help promote effective response to crises in the poorest countries in the world. But over the first decade of this instrument, this is the decade leading up to COVID, the average time from the disaster to the first dollar flowing from this fund was 398 days. And I think this speaks to it's all very well having money arranged to go into government, budget mobilization, but that link between the money coming in and the money coming out is so important. And I think this is really where one of the real opportunities of the international system lies in developing instruments that combine bringing the money in, but also, as Heike mentioned, sort of putting it through systems that actually deliver impact for poorest and most vulnerable people. So I think that there is, in terms of the agenda for the international system, I think it's important that there is more pre-arranged finance in the system. I think it's important that we increase the quality and get better at those building blocks. For development banks, the humble lending operation has so much power as a way for international actors and development banks to partner with countries on agreed priorities. And I think we need something similar that provides contingent finance, but in a sort of same partnership manner. And then finally, I think particularly in poorest and most low-income countries, this disclosure, and it's mentioned in the report, this issue around disclosure of risks and having a shared understanding of what the protection gap is and how it's going to be addressed is so important. In the sort of steady state growth model, having clear understanding, in countries as well as the international system around where poverty is, the level of poverty, and what can be done to address it is so important for shaping that conversation around ending poverty. And similarly, if we want to end the protection gap, it's really important to have that common understanding of the protection gap. And that will help to bridge the gap between development, between climate, between humanitarian, as well as that sort of that partnership between international actors in developing countries. So thank you for the incredible, sorry, I've talked rather a lot. I think the report is incredible. It provides lots of good ingredients to be applied at different levels in different kinds of countries in the international system. And it certainly is being very well read.
Thank you very much, Daniel, for these comments. As we have mentioned, not all countries come equal to these discussions between developed and developing countries. And the framework, it's one of the aspects, how it could be applied. But we were hearing that using the words fiscal and financial in a non-distinct way. And in fact, there are fiscal consequences for that. And in OECD or developed countries, there are institutions who are in charge of assessing these fiscal risks, such as the OBR. OBR became a household name in recent months in the UK. So we are very fortunate that Andy can come to us. And Andy is also chairing a working group of the independent fiscal institutions, the fiscal watchdogs across OECD countries, on addressing the consequences of climate change. So he's very well placed to address these challenges. And Andy, I would like to know how you think governance can best incorporate climate risks into the fiscal risk assessments, and how do you see the equation playing in? Thank you very much.
Thanks very much, and thank you for having me. I just echo the commendation for the report. It's a fascinating piece of analysis and advice. I did come away from it thinking that my overarching conclusion was that I wish we weren't starting from here. The adaptation risks that are covered in this report have to be dealt with at the same time as the mitigation policy challenge, and after 3 fiscal crises in about 15 years that have left us all with much higher public debt. So it's a real fiscal challenge from many directions. How do we integrate climate risk into fiscal risk analysis, I think, is an interesting question. We at the OBR did a report for the UK about 18 months ago, and since then the phone has been ringing. We've been talking to finance ministries around the world. We've been talking to fiscal councils about how we did what we did. I take away from this that, you know, we all share the goal. We all see the urgency of doing this, but it's just not very easy. So my reflections on the work we did at the OBR was that we were just extremely fortunate to be able to draw on some very detailed work on getting to net zero that our climate change committee in the UK had done, which meant that we could build on that analysis of what would happen to the whole economy to figure out what would happen to the public finances. We could also draw on the work that the Bank of England was leading at the network for greening the financial system on macro risks and the carbon pricing associated net zero. I thought that it was easier for us to do the work as a fiscal council than it would have been for our finance ministry to break this ground, because we had to make some big assumptions to put the numbers together to fill some gaps. That's easier to do if you're just an analytical body rather than having to make the policy on the back of those assumptions. The work we did on mitigation, on net zero, was much more granular than the work we did on adaptation. That reflected the information we had available. So things like this report will help us develop what we've done on the adaptation side. One of our charts is in your report, which was the most broad brush piece of analysis we published on the physical risks from unmitigated climate change, where the UK, if you work through the kind of temperature and GDP models, is a winner from unmitigated climate change for quite a long time, if you only think about temperature. That didn't feel right to us. You know, this is a world of passing tipping points, of our major cities on the coast being inundated, and of course of global conflict and international migration. So we put together something much more broad brush that illustrated the damage that could be done to the public finances. And then one final reflection on the report we did is that I was left wishing we had a better baseline against which to compare the risks, the expected value of adaptation physical risks is not zero. And the expected cost of mitigation measures relative to a no climate change baseline obviously is costly, but climate change is here. And the way we think about all other risks is that we forecast our best estimate of what will happen on current policy, and then we think about risks around it. And that's very difficult to do on climate related fiscal risks, because these things are not well integrated. So the report recommends integrating climate and fiscal analysis better. To do that, I am left feeling that what we need is an integrated forecasting architecture that covers temperature, emissions, energy in the same way as we cover the economy and fiscal outcomes. Now, taking adaptation and mitigation together, I think, is just very important. This report, you'd read this report and you would say that for those risks that cannot be mitigated explicitly, what you want is a tighter set of fiscal targets in order to have more space to deal with the costs of extreme events as they occur. If you read a net zero mitigation report, you would think what you want is a looser set of fiscal rules in order to be able to invest now to get emissions down and avoid costs in the future. This is a tricky dilemma for policymakers. I don't know if I could just, one last thing on that I would love to have been able to draw on when we were doing the work, and I'm sure other institutions would, is the kind of the global public good that is international forecasts presented by international institutions. You can sit in a finance ministry in any country, and if you want to analyze risks from the economy, you download the WEO database and you start. If you want to do climate related fiscal risks, first you need to learn about the IPCC and its temperature emission pathways, which one is the right one. You need access to the IEA's energy outlook. You need to put all these things together. You need to understand them. Now, in preparation for this, I went back and reread the 2012 OECD environmental outlook, and that has every piece of information one would need sat in a fiscal council in country X seeking to do this kind of analysis. If that were available each year, updated for the latest energy prices, the latest policies, the latest technological developments, we could all at the country level be doing our own country-specific fiscal risk analysis of climate change. So I think that would be a huge public good. Thank you.
Thank you very much, Andy. So as we have seen, I think there's been three slightly longer interventions. So we'll just have now a few minutes for questions. But as you have seen, the discussion evolves around some of these possible international public goods that are needed to deal with an international challenge. So I don't know if anyone in the audience has any questions or comments. Otherwise, maybe I will turn back to some of the presenters. So we heard the big question now that the question of losses and damages has been put on the table is how do we deal with this? There was a proposal, the Bridgeton Initiative, that has been put on the table. And then there is the challenges of implementation, because the report is very rich, but when we come to a country level, we have done a case study of the Philippines, which arguably is one of the developing countries with the most sophisticated or pretty advanced financial architecture and mitigation strategy, but many countries are not as advanced or as prepared as the Philippines. So what can be done there? I don't know if anyone of the three of you would want to address the question. Heike?
Yeah, I mean, that is basically the idea of the global shield. To work with vulnerable countries. I mean, the Philippines would be one, but you asked specifically like for others who are not as advanced, but start from the country level, start with the analysis of risk, and always, as we did with the institutions involved, but also regarding the analysis already there, built on what is there. So the idea is not to come up with more reports that are, or analysis that is already there, but building it really owned by the country. What are the risks, which risk to prioritize, because it either has the worst impact, or is targeting or impacting the most vulnerable communities, or the most weak or important parts of the economy. So really have different criteria to analyze the risk and then prioritize the protection gaps, and then really mobilize the support regarding the analysis, the really stakeholder process. I think both of you mentioned it in country, to really get everybody engaged and to discuss what are the priorities and how do we want to address them, what is our role as stakeholders versus private sector, so on and so forth, and find the international political will and finance to support it in the most efficient way. And I think this is what we aim at, and we need bold countries like Fiji or others. The V20 identified a couple of pathfinder countries. I mean, the countries also need to be ambitious to start this process, because it asks a lot of them, and we need to support the financing for this process.
Thank you very much. Daniel, you want to say a few additional words?
I mean, and I think the Philippines case study was extremely interesting. I think we have so much to learn as, well, everyone has so much to learn from countries that are on the front lines of the climate crisis and have extreme hazard events on a quite regular basis. I think these are countries that are being forced to learn very quickly what works and what doesn't work. They're not just developing solutions in ivory towers and then hoping that they somehow work. So I think there's a huge amount that can be learned from countries like the Philippines. One of the things I found really interesting from the case study was there was, you know, how little, well, the mention of how the international system helped the Philippines. There wasn't a lot of discussion around technical assistance being the silver bullet. There was some discussion about some concrete instruments that provided pre-arranged finance that have helped the government of Philippines along their journey. I think as an organization that does provide advisory services to countries, I can say it's very easy to overestimate the potential for outsiders from a country to really add value, and underestimate the importance and ingenuity that countries themselves have. So I feel it's important to find mechanisms for countries that are innovating like Philippines to share their lessons with other countries. But it's easy to overestimate the international supported technical assistance and to underestimate the importance of those financial instruments. You know, Philippines is a special case, but there are other countries that don't get hit by natural hazards on a very regular basis. Surely there are things that international organizations can do that help them in a faster way. Are there lessons from what the government of Philippines themselves are doing that should feed into how the international system helps other countries? So I think it's fascinating reading. I think it's really important in rooms like this to approach with deep humility and to learn from. There was an interesting tweet I'm just sharing from, you know, in the context of the German floods. There was, you know, somebody who was a strong advocate from Bangladesh who tweeted, you know, we can provide support from Bangladesh to Germany about how to better reduce how to reduce flood deaths. And you know, that was a slightly uncomfortable message, but it's also true. I think, you know, we are, you know, after COVID, it's very difficult to argue that somehow high-income countries have got everything sorted, particularly with risks that are changing or with low probability risks.
Thank you very much, Daniel. As someone who spent a few years Shaping policy debates need to engage with people to shape consensus. So these are governance issues. So I'm very pleased now to give the floor to Elsa Piliszowski, the Director for Public Governance at the OECD, for some closing remarks. Elsa, the floor is yours.
Thank you very much, Stefan, and Heike, Daniel and Andy, thank you very much for the insightful discussion today. It's great to hear that we're coming up with solutions, we're coming up with developing the tools little by little. Even as Andy was saying, we wish we were not there. We wish we were at another point, and but obviously we need to advance fast. So also let me take this opportunity to really thank Joe and Carmine for the really excellent cooperation across the OECD on this report. Obviously, all these issues about climate change are genuinely transversal in nature and require really horizontal collaboration. And by collaborating across the House, I think we have delivered that yet another example of OECD at its best. So thank you to all the teams. We're also very, very grateful to the many delegates and experts in all the relevant policy communities who made such work possible. In particular, the delegates of EPOC, the Environmental Policy Committee and its working party on climate investment and development, the IPPC and not the IPCC, the Insurance and Private Pensions Committee, and of course, our newly established committee of senior budget officials. And obviously, I would like to extend our immense gratitude to BMZ and GIZ for supporting such important work. So obviously, this report is all about resilience. Of course, climate and adaptation is one of the things that will create a lot of crisis in the future. There are others coming up, and we're entering a world of multiple crises. So we have to learn from every single possible crisis to see how governments have been adjusting, how they have adapted, and what tools they have used. We're starting, for example, like whole of government evaluations of what happened on COVID, and I think some of it can also, some of the lessons can be learned also for adaptation crisis. But let me draw the topic to another one, and also another ramification of these adaptation issues. The Public Governance Committee at the OECD is working heavily right now on reinforcing democracy and on building trust and reinforcing democracy. One of the things that we learn from our studies and surveys on the drivers of trust is that crisis preparedness today is an important driver of trust, and that the perception that citizens have of their government's preparedness is a significant driver of trust. Today, it used not to be the case. Now it's the case that drivers evolve over time, but that means also that the preparedness that governments will be able to show on climate adaptation will be important in the future. And right now, the data are not fantastic on whether citizens are finding that their governments are prepared. And we're talking here about the most advanced countries with solid institutions. So there are probably many countries in the world with less solid institutions which have issues like that, also much bigger issues in the future. But we got also some good insights here from Daniel on communications, also on transparency. That will be very important also in this setting, and I think we will have to also learn from that. To quote some recent numbers, natural and man-made catastrophes have caused $268 billion of economic losses so far in 2022. Of this amount, less than 50% were insured, I understand. So across the world, basically, governments are picking up the rest of the bill and covering also the most vulnerable. And obviously, we all know public finances are not unlimited, and this is why we need really sound public expenditure and budgeting frameworks to really help strike the right balance. So this is what this report also is about, and it will help also with our broader strategy on spending better. So dialogue on this issue will continue. It's very, very important that we continue these discussions. It's also very important that discussions continue between the technical, at the technical level, really between the scientists, the specialists of the environment, and also the risk and public finance modelers. And this is for us a crucial governance issues of how to make sure that we have the institutions to bring these people together around the same analysis and around certainly the same table. But there's also, you have underlined it quite a bit, the need to be a dialogue at the international level, including, you know, with the countries in the global south that may be more affected and have more experience than some of our OECD countries. And also, I think, Heike, you've given us a lot of ideas on how to take that in the future, and also the kind of solidarity that we can have across countries, and how we can work all together on these challenges. So we look forward to the next stages of this work, stand really very much ready to continue this work and continue to engage on this important agenda. And I really want to thank everybody who contributed and who attended today. Thank you.